Hey, welcome back to the channel. Happy Monday. My name is Jesse, and today we are going to be checking out Adobe. Now, as always, check out the description. I've got a timeline of all the content, so if you want to skip forward to certain sections, feel free to do so. All right, and here we can see a list of all the different types of tools and utilities they offer through their kind of monthly subscription base. Mostly it's going to be for like photo editing, video editing, creating thumbnails, graphic design, stuff like that. A lot of pretty popular and highly used tools, and this kind of goes into the revenue model of monthly reoccurring revenue for them, which has been very good over the last like 7-8 years, and we'll see that is in the financials. But before we go into those, we'll jump on into the 5-year chart. All right, here we got the 5-year chart. As we can see, we started off at about 150, got up to about 380 before the COVID crash, and then went down to about 280 during the COVID crash. Rebounded quickly and marched our way on up to about $680, and then started fading off with this latest market sell-off. We're sitting at about 380 right now. All right, so with that being said, let's jump into the financials. All right, so real quick, I want to go through this investor relations data sheet from Q2, I believe, and I want to just go through a breakdown of their different revenue segments and their revenue by geographies. So we can see the revenue, digital media, digital experience, and publishing and advertising. Digital media definitely makes up the largest segment with about $6 billion. Digital experience is about $2.1 billion, and publishing and advertising about $186 million. So it's broken up about 73% digital media, 25% digital experience, and 2% publishing and advertising. We can go over to the geographic areas. We see about 57% is made up from the Americas, 27% is from EMEA, and 16% is from Asia. So we do have some international exposure there. Going down further, we can kind of see the overall products that they offer and the different segments that they offer them in. So the three main segments are going to be Adobe Creative Cloud, multi-surface apps, desktop apps, mobile apps, and then you have Adobe Document Cloud. So we have like Adobe Sign, Adobe Scan, Acrobat Pro, and then we have Adobe Experience Cloud. So they have basically three main software suites. The majority of their revenue is going to be coming from these Creative Cloud suites, though. All right, here we have the last 10 years of information on a quarterly basis. We can see from a revenue standpoint, gross profit down to the operating income, net income. We can see steady growth over the last 10 years, really starting in about 2014, I believe, is probably when they started doing their kind of monthly service-based model. You can see that we've had a little bit of increases with expenses, nothing crazy. Our EPS diluted on a fully diluted basis have seen steady growth since 2014. Weighted shares outstanding looks like we have seen a little bit of buybacks here and there over the last 10 years. And if we go on over to the balance sheet, we can see cash, short-term investments, total current assets, and total current liabilities has been kind of steadily uptrending a little bit. Nothing insane when compared to the business growth. Cash on hand and short-term investments is sitting around $5 billion. Total assets, total liabilities has seen a slight increase over the last 10 years as well with the overall business growth. So nothing crazy here. Goodwill and intangible assets has seen a little bit of a increase over the last several years. So we do have about, it's going to be around 15 billion in goodwill and intangible assets. And then here we can see stockholder equity, capital lease obligations, liabilities, total equity, property, plant, equipment, and retained earnings. Retained earnings has increased pretty drastically here lately. Total stockholders' equity has kind of steadily increased as well. Go over to the free cash flow statement, more of the same. Steady uptrend over the last 8 years or so, starting around 2014. Capital expenditures, depreciation, amortization, investment in property, plant, equipment. Nothing too drastic. We have seen a little bit of steady increase with the business growth. Free cash flow, net change of cash, steady growth as well. Change in cash has increased slightly over this last quarter, and we can kind of see what they're doing with their cash flow. And we see a lot of common stock repurchases, not really any dividends paid. We had some debt repayment here. So they probably got their debt in good order, and then have just been buying back shares, and we can see that in the buyback section as well. But it hasn't been a crazy amount of buybacks, I think, compared to the overall outstanding share count. Ratios and metrics, we can see really healthy gross margins. Gross margins staying about 87%. Bottom line margins, or operating profit 34%. Let's see, net profit margin 27, pre-tax profit margin 34. So really healthy margins. Net income per share, operating cash flow per share, free cash flow per share has seen steady increases over the last 8 years along with the other metrics. So it's been good. They've been able to keep their margins up, if not expand their margins. Well, they definitely expanded their bottom line margins over the last 8 years. And can I kind of see that in the share price reflected, especially with the yield metrics and the valuation metrics have kind of increased as we've seen the company become more and more healthy from a financial perspective. Yield metrics for free cash flow yield and earnings yield have kind of remained between about 0.5% to 1%. And then we have, let's see, PE ratio, different valuation metrics, EV to free cash flow, EV to operations. It hasn't really changed a ton. We have a little bit of, it looks like, expansion right through here, but they've stayed pretty consistent. Enterprise value versus market cap kind of stay in line, so there's no extraordinary amounts of debt or cash on hand. Adobe does not pay a dividend, it looks like, so that data is not there. Go over to our growth percentages, and we can see that since about 2015, they've really kicked it into solid revenue and gross profit growth, about 15%, 20, 20, 20, 20, 15, 24. So really steady growth over the last 7 years. Kind of see those in the bottom line metrics as well. That growth going all the way down to the bottom line, which has been really good. Dilution buyback per year. So it looks like they're buying back about maybe 1%, maybe around 1% per year on average over the last couple of years, between 0.5% to 1%. Fully diluted EPS growth, you can see they've had pretty decent EPS growth over the last several years. Dividend growth is not there. We look at estimates, analyst estimates for 2023, we see are 16 billion, 6.3 billion. Then EBIT average would be 5.2 billion and 6.5 billion. Securities transacted, insider transactions recently. Looks like we've had some sales, not seeing anything super crazy. So with that, we can kind of see overall, we have our overall metrics here over the last 10 years on a yearly basis instead of quarterly. On bottom line yield percentage, especially when compared to the 10-year treasury, it's really been yielding between like 2 to 4%. So the market's paying a premium basically for the growth aspect of the company. If we look at fully diluted shares outstanding, we see a little bit of buybacks there. Short-term quick ratio, current ratio, cash ratio, all coming down in line. And our 5-year metrics, we kind of see the average buybacks of 0.82%, bottom line growth of 21.75% on a 5-year basis, average EBIT yield spread 0.18, net yield spread 0.03, free cash flow yield spread 0.78. We see EBIT growth over the last 5 years, 21%, net growth 23%, free cash flow growth 20%. So really solid growth numbers pretty much all the way around here. So for this one, I'm still going to target a 15% return with a 2.5% margin of safety. The quality of the business is very high, so it's going to have a pretty low yield spread. This has been the 5-year average, and I'm going to add 0.5 basically for my bullish case and then go up from there. Bottom line growth, we're going to take the previous 5-year average as the very bullish case and kind of regress off of that. So in the different scenarios that I have, we're looking at a 10-year treasury going from 4.8% in very bearish to 1.9% in very bullish, a dilution of 0.5% in buybacks to 1.82% in buybacks, bottom line growth of 9.13%, growth to 21.75% growth. Realistically, I think a base case is more probable in this scenario. Probably 14% bottom line growth would be kind of what I would expect. EBIT yield spread as far as the evaluation, 1.94 in a bearish case, 0.68 in the bullish case. Net yield spread 1.77 in the bearish case, 0.53 in the bullish case. Free cash flow yield spread is 2.23 in the bearish case and 1.28 in the bullish case. So when we add those up together across these different cases, we're really looking at very bullish, probably be yielding around with the 10-year treasury and the spread about 2.5% to 3% on the valuation. All the way to very bearish would be around 6.5% or so. So we have a pretty big gap between our evaluations of what this company can be trading for in the future based off of those forward-looking growth assumptions and where the market might value it. So we know historically it's traded around here. So if we had the opportunity to where it was, yielding about 5% on the bottom line to those bottom line metrics, then that's the scenario where I would start feeling pretty good, feeling pretty interested. And that would be right in that bearish case to that base case for me. See the 5-year price target, or the 2026 price target, would be anywhere from 284 to 1269. Obviously a huge gap, but really that base case is what I'm probably going to be looking at the most. That base case is 566. So we have a pretty big spread, but I'm kind of really narrowing my focus on that bearish and base case, which would be 396 or 566 and a 5-year target. Based off of all that, my buy price would really be 539 for the very bullish scenario, 354 for the bullish scenario. Base case would be 240, bearish would be 168, and very bearish would be 120. So like I said, base and bearish is probably where I'd be hanging out or looking at the most. And we got a ways to go there. We're almost in a buy from the bullish scenario, but I think if you got the opportunity to get, or if I get the opportunity to get it more in this 240 and 168 area, that allows for a lot more margin of safety and a lot more stock price increase through multiple expansion if those yields were to mediate back down to the previous historical mean. So if it went from like 5% yields down to 2% yields again, you get all that expansion. With all that being said, we can go over the watch list, copy this on over, and we are going to put it on the watch list and see what happens. Dun dun, whoops. Don't want to do that. So, yeah. Adobe is one that I think is a really solid business. I think they're going to have stable revenue. I mean, we can see in the past how stable the revenue has been through this new kind of revenue sales structure. And I think that's going to continue. Something I'd definitely be interested in getting it at the right price. The right price for me is just going to be a little bit further down. So we'll see what happens. And maybe they can keep this up and I may never get my entry, but it's definitely a good one to keep an eye on regardless. So, all right, I hope you liked the video. If you did, please like and subscribe, and we'll catch you in the next one.